It's Elizabeth Rose. I wanted to bring you some quick news on the housing and financial markets because it's been a really busy week. I've had a lot of stuff come out. I'll start with some of the basics. Every week on Thursday, we get Freddie Mac's PMMS survey. That's the private mortgage market survey. And what they do is they survey lenders across the U.S. and get a read on where we are with interest rates. So in this week's survey, the lenders that were surveyed reported that the 30-year fix is averaging about 4.46% with a cost of 0.5%. Now, the MBA does a similar study. Theirs comes out on Wednesdays, and yesterday the MBA reported their 30-year fix survey showed 4.65 with a cost of about 0.5 point. So the costs are about the same. The rate is pretty darn close to one another, so I'm thinking it's probably just due to they do a 5-day average or look back. So I think it's just the difference in timing. The Fed came out with their Beige Book, and they reported modest growth in home sales and construction. And we've got to remember this is winter, but it was also restricted by labor and materials. That's what's keeping it in the modest category. Home values are rising, no surprise there. CoreLogic reported that home prices rose 6.6% in January. That's January this year over January last year, so year to year. And that's pretty impressive. So that's your one-year average right now of home price growth. From December to January, it was 0.5%. And that's actually pretty attractive as well when you think about the fact that it's December to January. This is not summertime, this is winter. So those were pretty impressive numbers. Home sales, though, are not looking so good. Both new home sales and existing home sales were down. New home sales were down 7.8% in January, and these are signed contracts, not closed yet, but signed contracts. And then existing home sales, pending home sales dropped, and they were down 4.7%. So what is a pending home sale? Pending is existing homes, so homes that are lived in and being resold. Those contracts are down 4.7%. So you got down 7.8 on new and down 4.7 on existing. Not looking too good. Once again, though, a lot of that is being attributed to the low inventory. So inventory's dropped 10%. We keep struggling there, and certainly in North Texas, we're having a big challenge, especially with homes under the $300,000 price point. So just lack of inventory. Otherwise, we'd probably be seeing better numbers. Another interesting thing, or interesting to me anyway, was consumer confidence in housing dropped like a bomb in February, dropped 18%. So I'm thinking this probably has a lot to do with the lack of inventory. Could also probably throw in that mix, not only the lack of inventory, but home prices are moving higher, interest rates are moving higher, and so they're probably feeling like the train is leaving the station and they're not sure if they can catch it, especially with no inventory. That makes the challenge that much tougher. With regards to the markets, well, it's been volatile this week, and we've had plenty of volatility for weeks. And the talks of the tariff certainly heated things up this week, and we had some other global and U.S. news that sort of shook things up. Now the tariff is signed. Bonds are holding their own this afternoon, which is a great sign. But now tomorrow we have the important jobs number. So tomorrow morning at 7:30 Central, we'll get a read on our jobs. We do get a report on Wednesdays, the ADP report, that showed some really good, strong job growth. We're pretty much expecting tomorrow's report to reflect something very similar. The big thing that we're going to be watching is wage growth. Is there any wage growth? If there is, that's inflationary, and any signs of inflation are not going to be good for mortgage bonds. So we also have some inflation data coming early next week. So it's an interesting time right now, and I see rates will continue to move higher. They're moving slowly, so no reason to freak out, but they are moving higher, and we're seeing that week after week. So that's the news today. And just a final word: the Fed futures is showing a 98% of a Fed rate hike at the next FOMC meeting. So that's coming up here soon. So we'll be keeping an eye on that as well. If I can answer any of your questions or help you with anything, I'd sure love to give it a shot. So give me a call. And until we talk again, have a great day. Have a great Thursday.